Hello guys, let's analyze Euro USD top-down analysis. So this is the monthly time frame without any delay. This is the monthly time frame. So if you look at the monthly time frame is where we get the directional bias, right? So looking at the monthly time frame, the market, the market has been pushing up. Like I said, from here. The market has been pushing for the past how many months, right? But currently, like I said, each time the market is pushing up, what causes retracement is the past supply zones or the past demand zones. So right now, if you look at this point here, the market is the market make a very huge impulsive move. I'm talking about this current trend, right? So the market make an impulsive move to the upside, and then I think try to retrace. So I was expecting a deeper retracement to this point before the market make a push. But after that one candle retracement on daily time frame, the market started pushing back to the zone. So this is the past supply zones here at this level. So the market pushed back again to the zone, and then we started seeing rejection, right? So now, if this zone is strong enough, we'll be able to push the market back to this level before we can start pushing to the upside, right? So, however, let's move to the weekly time frame because the market is sitting. We know that the market is sitting on the danger zone in Bastra terms, right? It's sitting on the danger zone. Let's see if the or the danger zone is strong enough or the selling neighborhood is strong enough to hold the market to the downside or the market will break to the upside. So we're going to see that clearly from the weekly time frame. So if you push to the weekly time frame, you see that since the market get into that zone, also, we have been having, before the market gets into the zone proper, we have been having, rejection or weakness, right? Look at how the market started moving from this level. You see the market push. Anytime the market want to push to the upside, it push with a lot of momentum. Anytime you want to drop, it struggles. Push to the upside, it struggle like that. So since the market gets here, buyers have lost that momentum to the upside. The market went into consolidation or into range, right? So in this situation, we want to see if the market give us momentum to the upside. It means that if the market is going to go to the upside, we need a serious momentum to the upside to be able to convince that the market is going to break this selling neighborhood or this danger zone to the upside so that we can comfortably be looking for a fantastic five in the lower time frame to trade to the direction of the trend. So, but however, this market has been ranging. I have a ranging situation here. Okay, so let me address this level. So you see that the market has been rejecting from this level, reject to the upside, went back up again, reject. So for me, I feel like, okay, if this market is going to go to the downside, it's trying to form like a big M pattern and then started dropping. But however, until we see a serious momentum to the downside, that is when we'll know that the market is pushing. Also, if we should put our line right here, you see that also this level like a consolidation right here, this level here. So it's like a consolidation as well. So I believe the market is going to push to the downside anyway, but until we see that momentum to the downside. So let's go because here we only know that on this side, if the market should drop, we are going to be looking for ways to buy, to sell to this level. If the market break, definitely is going to drop to this long-term projection, right? So But however, also here to the upside, this side also, excuse me, and this side also is like the market has been rejecting. So, and this level also, the market has been rejecting. So this is like between this level here is like a range. So we now go to the daily time frame to see clearly. So on the daily time frame, we can see that ever since the market also, let me minimize. Ever since um, the market also touched the selling neighborhood or the danger zone. The market started giving us, look at, let me go back to the weekly. Like I said from the weekly, I'm seeing this as a form of triple top or double top like this. The market touched a little bit close to the danger zone. It dropped back and then it went back up to the danger zone. So this is going to be like a M formation to the downside, which is also a reversal pattern, right? Because the market, buyers are losing momentum. They have exhausted, right? So maybe the markets will want to drop to the downside. So, but when we go to the daily time frame, we are seeing we are having clarity on the daily because if you look at where the market was pushing to the upside, market structure wise, from this internal structure here, you see the market started giving us all those characteristics of an uptrend like that. And then before they get into the zone, and then what happened? Since the market get into this zone, the Dow theory started breaching, right? The market breached the Dow theory in the sense that there was the last low, there was the last high before the market gets into the selling neighborhood or the danger zone. And then the market started also within that level. Since the market started rejecting from the danger zone, we started seeing a mini or internal structure as well. We see this low, we see this high, we see this lower low, and this lower low was breached. The Dow theory was breached. They respected this previous low. You remember the Dow theory says that market will continue to move or price will continue to move in a specific direction until the preceding structure breaks. And this is what happened here based on in relation to market structure synchronization from the monthly time frame. Because the reason why the Dow theory has been breached is because the market is coming from a strong selling neighborhood from the higher time frame. So yeah, so now what are we expecting? What am I expecting on Euro USD? I don't want to see this as a blind spot. I'm supposed to see this as a blind spot number one and also Quasimodo reversal because this is a low, this is a high, this is a higher high, and then this is a lower low. Why I don't want to see this? Because we don't take trade that has no confirmation. So if I should go to the higher time frame, there is no confirmation to justify this potential Quasimodo or blind spot level, right? So let's go now to the weekly time frame. If you look at this, no confirmation here. There's no confirmation candle here. So it becomes, for me, it's not something to even talk about. There is no confirmation here, so there is no need to consider this either a potential Quasimodo or a potential blind spot. Rather, I would rather judge the market in respect to the market structure and the Dow theory being breached. So what I'm expecting is that now that the market has breached here, which formed a low here, and the market is coming to this side to form a lower high and then push to the downside. So it is this level now. We can now go comfortably on the H4 time frame and H1 time frame to see to wait for something to happen. We want to see something happen in line to the sell side, right? So we want to see something happen, but for now, there is no indication to start pulling the trigger. So if I come to the 4 hours time frame, you also see that 4 hours also started pushing. When the market is pushing from the daily, it's causing a retracement to form a higher, which I'm expecting a lower high to drop. So the retracement, if you look at it market structure wise from the from the H4 time frame, you see that this retracement also is giving us a little bit characteristics of an uptrend like that. This is a high, um, low here. The market breached a little bit from a higher high, then started consolidating, right? We may want to see the market started breaching this little trend on the H4. So you see the Dow theory started de-respecting here. You see that it's a sign that you may want to come down to this level. This is where we expect. There's no way the market can drop from year to year without providing at least a setup for us to enter. But the most important thing is to understand the trend synchronization and the trend direction so that you know where to expect your fantastic five, because you don't have to come to the chart and start trading them randomly, right? So you can also scale down to 1 hour time frame and also see 1 hour trend. Also, you see clearly market structure here on 1 hour time frame. You see that the market structure is obvious here. High, low, higher, high, lower, low, higher, high, lower, low, like this. And remember, since the market started pushing when that daily retracement started, you see that market has been respecting the low, breaking the high, which the Dow theory states that as long as this market continues to behave like this, right, it will continue to move in this specific direction until the preceding structure breaks, means until the previous higher low or until the preceding structure breach, which means that since the market started pushing here, we have been respecting the low and breaking the high. And you also need to understand that it is not all the time when the market break, maybe something like this. It is not all the time when the market break the previous high. That means a change of character. Because if you fall, sometimes it breaks like this and then started pushing to the upside. Because when you fail to understand this is because you depend your analysis on 1 hour time frame. The only reason where when the Dow theory breach and we are confident to look for Fantasy 5 to trade is because we are relating different time frame, which I call market structure synchronization. We are synchronizing from the monthly, synchronizing from the weekly, synchronizing from the daily. So it's going when the Dow theory breach on the lower time frame, is because of what the weekly, what the monthly, the weekly, and the daily are talking about. But when you just rely your analysis on one time frame, you see that sometimes when the Dow theory breach here, and then you think the market has reversed. The market cannot reverse when the higher time frame is telling the market to go up, because the lower time frame obeys the higher time frame. So yes, the higher time frame is saying we should be going down bearish, and then the lower time frame is showing bullish currently. It means that as in a short period of time, the lower time frame will definitely obey the higher time frame, which means that this is where we started expecting Fantastic Five to happen. Fantastic Five only for sales that we are expecting it based on what? Based on our higher time frame analysis, which I said top-down analysis is the only analysis you should learn. So guys, for now, nothing has happened on this is my expectation on Euro USD, and this is 1st of October. So I believe this month is going to be great. Again, in respect to our system, and our system also is a system of patience, right? So guys, I believe you learned from my bias, right? So um, like I said, is you don't just watch, you can also go to the chart and try to see, not trying to see the chart in respect to your own strategy. You try to see the chart in respect to the concept I am trading, right? The concept I'm trading, you look at it, how does the market move in respect to the concept we trade? So this is how you get better, but you must understand top-down analysis because it's the Google map. Guys, I believe you learn you get something from this analysis, and if you do, make sure you leave a comment, even if it is just comment, right? You leave a comment in the comment section, hit the like button, and also you can also support to share my video. All right, so I'm going to see you guys in the next one. God bless you. Thank you, guys. Peace.